So the 4 steps required to record the disposal. The first one is to update depreciation. And the second one is to calculate the carrying amount, which is the difference between cost and cumulative depreciation. So sometimes we have another words for the carrying amount, which is the net book value. Then you may receive a proceeds for the asset from the buyer, and then you compare the proceeds with the carrying amount. If you get more than the carrying amount, that's a gain. If you get cash less than the carrying amount, that's a loss. The last one is to record the disposal. And we talked about this on last Thursday in the classroom. If you have an asset that is fully amortized, okay? So then basically the cumulative depreciation will be the same as the cost, right? So that means fully depreciated, right? So the full cost, the full value of the asset, 100% depreciated. So your cumulative depreciation should equal to your asset, right? Cost. In this example, the cost of the equipment is 31,200, okay? And it's fully depreciated, okay? So then the cumulative depreciation equipment is also the same balance. So when you retire the asset, you remove it from the balance sheet, okay? So the way to do it is you just close those two accounts to make the balance to be zero. And on Thursday, I have shown you that if you use T account, right, it will be very obvious you have to credit equipment to close the equipment account, make it balance to be zero. And you have to debit cumulative depreciation equipment, this account, to close that account, make it balance to be zero. Okay, so we have done this. But sometimes they are not fully amortized, okay? They're not fully depreciated. So this is one example. Okay, this is one example. So here, the cost of the furniture is 60,200, okay? The cumulative depreciation of the furniture is 46,920. So not equal to the cost. So it's not fully depreciated. So if you draw that T account, okay? So what happened is for the cost, right? You have a cost furniture, you have a furniture cost account. So this cost account has a debit balance, which is 60,200. And then you have this cumulative depreciation on the equipment, this account, okay? This account, we know that cumulative depreciation is a contra asset. So it always maintain a credit balance, right? So the credit balance is 46,920. So now we are disposing this asset, and you sell it for $15,000, okay? So the first journal entry, we think about, okay, if I sell the asset, okay, I receive cash. So my cash balance increased. So I'm going to debit what? If my cash balance increased, what do I debit? You debit cash for 15,000, okay? And now, when I sell this asset does not exist on my balance sheet anymore. The balance should be zero. So this 2T account, okay? So this 2T account has to have a balance of zero after the journal entry, right? Because I remove it from my balance sheet, the asset was sold to other people, become other people's asset. It's not my asset anymore. So the furniture account has to be zero, the balance, the cumulative depreciation on the equipment, on the furniture has to be zero as well. Okay? So now if you take a look at this, it's so obviously what you're going to do, right? How can you make the furniture account, T account balance to be zero? Well, you need to put 60, 200 on the right side. So you have to credit furniture. Okay, you have to credit the furniture for 60, 200. And a similar idea, if you want to keep this account to be zero for the cumulative depreciation on the furniture, well, you have to debit. You have to put 46,920 to the left side of the T account. So you have to debit cumulative depreciation. This is a furniture, right? For 46,920. Okay, does this make sense? Yeah, okay. So now I need to know, is this a gain or loss, right? So for any journal entry, you have learned that the total debit has to equal to the total credit, right? So at this point, I want to ask you, what is my total debit? And at this point, what is my total debit and what is my total credit? Can anyone tell me what's my total debit?
Is it zero?
Pardon me?
Zero, or do we have to like add up the two debits?
Yeah, we add up the two debit. You are right. Yeah. So if we add up these two debit, we should get 619,200. So when I added up these two debit numbers, I get 61,920, right? That's my total debit. And what's my total credit so far? I only have one credit here, and the total credit is 6,200. And are they the same? Are they equal? No. So now, in order to keep this balanced, do I need additional debit or do I need additional credit?
Credit.
Yeah, I need credit, right? And if I credit, okay, that will be a gain. So remember, when you credit, that is a gain. You credit a gain, just like you credit income, right? Gain is type of income, right? When you credit revenue, you credit income, but gain is a type of income, right? So when the difference, and then you calculate the difference will be 17,200, 1720. So you record a gain on disposal for 1720. Does this make sense? The journal entry to calculate, to record the disposal of PPE. Harsh and Jules, does this make sense? Anna is nodding. I can see Anna. So Anna is nodding. So it makes sense, Harsh? How about you, Jules?
Yes.
Can you hear me, Jules? Okay. So this is a situation that you realize again, right? What if, okay, now, let me clean this up a little bit. Okay. Now, what if you sold it not for 15,000? You sell it less. If you sell it for 9,000, okay? If you sell it for 9,000, so this asset entry is the same. These are the same. But you receive cash, you receive less cash, 9,000. Okay. So now let's do it again. Let's calculate what's my total debit. Okay. So this one, my total debit will be 55, 920. My credit is 60, 20. So I need additional debit or additional credit? My total debit right now is 55, 920. My credit is 62, 200. So do I need additional debit or the additional credit?
Debit.
Okay, I need additional debit, and the difference is 4,280. So that would be a loss. When you debit, it's like expenses, right? You debit expenses. So when you are lost, you debit loss on disposal. Okay. So you can see, right, when you dispose of PPE, you could end up with a gain or loss, or probably nothing, right? If everything just perfectly balanced. Okay. Okay, so let's work on this question. Okay. And we'll do this together. We'll do this together. So ICE Parts Supply Company purchased an industrial robot on July 1st, 2022. Okay. And the cost, the purchasing price is 395,000. It paid $100,000 in cash and signed a 5% note payable. Note payable is a liability, right, for the balance. The industrial robot was estimated to have a 2 year of useful life with 15,000 residual value. The company has a December 31st year end and prepares adjusting entries annually. It uses the double diminishing balance method of depreciation to the nearest month for equipment. So this gives us the depreciation method, double diminishing balance. The following are related transactions are adjustment during the next 3 years. Okay, during the next 3 years. So the December 31st, we want to record the annual depreciation. Do you guys want to try on this? What is the annual depreciation, okay, for the fiscal year ended December 31st, 2022? Okay, so I want you to work on this one first. You can see this question on the slide, right? If you go to the bright space, and then you can download the PPT, and then it's on slide number 42. That's where the question is. And there's a typo. I have a typo here. This one should be 20 years. 20 years of useful life. I give you 5 minutes to try to work on this, see if you know how to do this. So basically, you use double diminishing balance method to calculate the annual depreciation, but don't forget, the purchasing date is July 1st, 2022. And then the year end is December 31st. So for the year of 2022, you only use the equipment for 6 months. You have to consider the partial year, okay? So first calculate the full year annual depreciation, and then you have to consider that proportion for the partial year, right? So that'll be 50%, right? 6 months out of 12 months. So I give you 5 minutes to work on this. Has Lindy, we are just working on this question. So we are just working specifically this one. We are calculating the annual depreciation for the year. We are calculating the depreciation expenses for the year ended December 31st, 2022.
Okay, all right, thank you.
Yeah. Some of the important information would be the number of the years of useful life, right? It's 20 years. And also residual value, 15,000. That's the residual value, right? And also, what's the method? We learned about straight line amortization, double diminishing balance method, and also units of production, right? That's the three depreciation method. So in this question, they're asking you to use double diminishing balance method. And for the year of 2022, you bought the asset July 1st, and we are considering December 31st. So that's just 6 months. Anybody have a number yet? If you don't feel comfortable to share it with the class, just send a direct message to me so I can see. I just want to get a sense of how how you are doing on this.
I'm still working on it, Professor, just to let you know.
Yeah, yeah. I give you 4 minutes to work on this one. Yeah. So if you already have an answer, just send me a message, right?
Professor,
Yeah,
I already have the depreciation rate.
yeah.
So at the time of doing the subtraction, I will only subtract the 50% of that.
So you are saying the 50%. Actually, you use 10%. So
Yes, I have a depreciation rate of 10%. So
yes, yeah.
since it's 6 months, I should subtract the 5%.
So you still calculate the annual, and then you prorate it using 6 months over 12 months, which is half. So, but when in your calculation, you still use the 10% depreciation rate, but then you make the adjustment, the proportion, which is 50%. That's for the timing proportion. Yeah.
Okay.
Yeah, you are correct. Good job. Yeah. Did you have a number?
I have 355,500 with the whole 10%. Now
Okay.
I will need to do the proportion.
Oh, I see. Half of that, right? Okay.
Yeah.
So let's take a look at this. So first, you want to know the depreciation rate, right? So depreciation rate. So this rate is calculated by 100% divided by the number of years of useful life, which is 20, right? And then because this is a double diminishing, double, right? Double means times two. So your depreciation rate is 10%. Okay. And then the cost, okay, the cost of this equipment is 395,000. So you do not consider the residual value, right? If it's a straight line amortization or units of production, you are calculating depreciable amount, which is the cost minus residual value. But for diminishing balance method calculation, right, you start right away with the carrying amount. At the very beginning, the carrying amount equals to the cost times 10%. But this is the 2022. You have it, you own the equipment on July 1st, and the calculation as of December 31st. So that's just the 6 months. So 6 months over 12 months. So I should have 19750. That should be my annual depreciation. Is this what you got?
Yes.
Mm-hmm. Good. Okay. So now they say December 31st, you paid the interest owing on the notes payable. Okay. So first of all, what is the amount of owing, right? We know the price is 395,000. That's price for purchasing the equipment. And you pay the cash 100,000. So the remaining balance is 295,000. That is the notes payable. Okay. So you owe people 295,000. And the interest rate you have to pay is 5%. Again, as of December 31st, so from July 1st to December 31st, this is only 6 months, right? So you have to consider the proportion 6 out of 12. So this would be the amount of interest you need to pay. Do I have a calculator here? So this one, I have a calculator. So 295,000, that's the balance for the notes payable, times 5%, and you only use for 6 months. So what I got is 7,375. Is that what you have?
Yeah, that's what I got.
Yeah.
Okay, awesome. Okay. So this is the year 2022. Now, for the year 2023, May 21st, the company paid $2,000 to repair the equipment. The repairs were for normal wear and tear. Remember on last Thursday, I was explaining the difference between capital expenditures versus operating expenditures, right? So I give the examples, something like, capital expenditures will extend the number of years of useful life. Capital expenditures is going to enhance the asset's ability to generate future cash flows, right? Future revenues. Well, the operating expenditures, they are only for maintenance, right? They're only good for regular like repair, right? For the normal wear and tear. So those would be just to keep that asset working. It doesn't increase the asset's ability. It just keep it working at a normal condition, right? So in this case, my question for you is, do you think the $2,000 is a capital expenditure or it's a operating expenditure? Does it increase the number of years of useful life, increase the asset's ability to generate revenue?
I think it's an operating.
Very good. Yes, this is just the operating expenditure. So basically, you will go debit repair cost, right? Debit repair cost. So this will be your expenses. Repair maintenance, 2,000, and you pay the cash, credit cash, 2,000. Okay, so this is just operating expenditure. Okay, if it's a capital expenditure, you have to debit equipment, right? If it's a capital expenditure, you're going to increase the cost of the equipment. Okay, so for December 31st, 2023, another year, you're going to record annual depreciation. So now, what is the annual depreciation for this year? Okay, so you are going to use the same depreciation rate. So you use carrying amount times depreciation rate. So what is the carrying amount, right? The carrying amount is the difference between the cost and the cumulative depreciation. So the cost is always 395,000 and minus a cumulative depreciation times 10%. So I have a full year for the 2023, so I don't have to make any proportion. The question is, what is my cumulative depreciation? Okay, what is my cumulative depreciation for the year? Okay, for the year of the 2023. Remember, I already have some depreciation, right? So that depreciation is this, $19,750. Okay, so I use the cost minus 19,750. That's my cumulative depreciation. Together, this is my carrying amount at the opening. Okay, this is the carrying amount as of January 1st, 2023, right? So I'm going to use that opening carrying amount times 10% depreciation rate to know what's the annual depreciation. Okay, so this one should be, let me use my calculator. Minus. So I have, oops, I have 37,525. Yeah, that's correct. Hasbly, yeah, that's correct. Okay, so you can see that to calculate the annual depreciation for the second year, you start with the opening carrying amount of the year, and you times depreciation rate. Okay. Are we okay with this calculation? Does anyone have any question?
But the 10% will be constant on each year that passes, right?
Yeah, you always use this 10%. depreciation rate, right? Except the very last year, the 20th year. In the 20th year, you don't calculate depreciation by the multiplication, okay? Because you know the residual value of the last year, okay? And you know the opening carrying amount. So for the last year's amortized depreciation, you take the difference of the carrying amount of the last year's opening minus the residual value. All the other years, you do this multiplication, except the last year. Students often made mistakes on that. So that's something you have to be careful. Yeah. Okay, so we are okay with this. Yeah. And then December 31st, paid the interest owing on notes payable. We know that the notes payable, so 295,000 times 5%, right? That's the amount of interest for a year, which is 14,750. Okay. Yeah, I think that's right. So that's how much they are paying for the interest for the 2023. The equipment was tested for impairment. It has a recoverable amount of this. On Thursday, I talked about impairment, right? So when things has changed, the equipment, the eyesight may lose it, may not worth that much, right? For example, the equipment may not worth as much as they think in the market, right? Because there's new technology, right? Making the technology obsolete very quickly, right? So those would be situations that you realize that your equipment does not worth as much as on the book. Okay, so that's what we are talking about. You are testing for impairment. We know the recoverable amount is 27,500. So the question is, I need to compare the carrying amount versus the recoverable amount, right? So what is the carrying amount as of December 31st, 2023? Okay, so that's going to be, initially, your cost is 395,000. That's the equipment. The first year, you have a depreciation of 19,750. The second year, you have a depreciation of 37,525. Okay, so this gives me the carrying amount as of the December 31st, 2023, right? So what is this? Let me quickly check this. Minus 19,750 minus 7,525. So I have 337,725. Okay. So basically, the carrying amount of the robot is 337,725. So that's the book value. That's how much value the company thinks, right? The company report. However, the recoverable amount is actually lower. It's only 275,000. So the difference between these two numbers is called impairment, right? Impairment. So how are you going to do the journal entry? Well, first I need to recognize the impairment loss. So you debit impairment loss. This is a loss. This is a bad news for you, right? Your eyesight does not worth as much value as you think. This is a bad news for you. It is a loss. So the difference is, let's see, 6, right? 62,725. And then how you gonna do credit, right? You have debit, and then you're gonna do credit. What do you credit? Does anybody remember? How we do the credit? Credit what? So you credit something for the same amount. What do you credit? Which account do you credit, right? So you credit the cumulative equipment. That's a very good try. Yeah, that's a very good try. The equipment cost account, you don't change that part. That's basically record the expenditures, right? The cost you have paid. So how do you reduce the carrying value? The carrying amount equals cost minus cumulative depreciation. So instead of reduce your cost, you increase your cumulative depreciation, okay? So you increase your cumulative depreciation on the equipment. So that's how can you reduce the carrying amount. Alternatively, you can reduce equipment directly, but that's not what we are supposed to do. We increase the cumulative depreciation on the equipment. So are we okay so far with this? If you are okay, give me a thumb up. Then I know I'm gonna move on. If you're okay, give me a thumb up. Yeah. Okay, good. Awesome. If you have no question, I will keep going, okay? Awesome. So now, March 31st, they sold that robot for 240,000 cash, okay? So this is the part I'm going to spend some time. Okay, so let me do a T account, okay? This is my equipment. And my equipment is always, let's say, 395,000. So that's my equipment. And then my cumulative depreciation on the equipment. So there's a bunch of journal entries made, right? So the first year, I credit 19,750. So that's my first year here. I will use a different color for a benefit. So first year, 19,750. Second year, 3,7,525. Okay, that's my second year. And then I also have this credit, right? Credit this account for this amount. 6,2,725. Right? So that's what goes into my cumulative depreciation on the equipment. So these numbers are for which date? These numbers are for which date? So I calculate the balance. So let's calculate this balance. I'm gonna add them up. 19,750 plus 3,7,525 plus 6,2,725. So I have 120,000. Is that correct?
Yeah, I got the same.
Oh, good. So this is the balance, right? So my equipment balance is 395,000. My cumulative depreciation equipment balance is 120,000. But when we're talking about balance, we have to talk about the date, right? So the because the balance changing all the time, right? So this balance is for which date, right? That's important. So this balance is for which date? So when we do this journal entry, this is the impairment testing, right? So the impairment testing was done December 31st, 2023, right? So this balance, this is for 2023, December 31st. Okay? So on December 31st, 2023, my equipment cost account is 395,000. The cumulative depreciation equipment is 120,000. Now, 2024, March 31st, they sold that equipment. Now I'm going to do that journal entry of dispose that asset. So tell me, what is my first step? If you dispose asset, what's the first step? Do you remember the 4 steps, right? What's the first step? So this part is important. Students often forget about this. What is the first step?
To update the depreciation.
Yeah, thank you. That's absolutely correct. So I need to update the depreciation. Why? Because here is December 31st, 2023. Now we are talking about March 31st, 2024, right? So it's at this time, we dispose the equipment, right? And there is a 3 months time period since the last depreciation calculation, right? So my last depreciation calculation happened December 31st, 2023. Remember, this depreciation calculation was based on yearly, right? It's on an annual basis, on the fiscal year end, right? So the last time we calculate depreciation is for the year of 2023 and on December 31st, 2023. And now we are selling the asset. 6 months has gone by since last calculation. So we have to calculate what is that amount of depreciation since the last calculation. Okay? So how do we do this, right? How do we do this? Can anyone tell me what is the carrying amount at this point? Because when you do a calculation of the when you do a calculation on the depreciation, you want to know what is the opening carrying amount at this point. I use the purple color, right? So what is the carrying amount of the robot as of December 31st, 2023? What is that carrying amount? That number is given in the question. I can tell you that. You don't have to do any calculation. That number is actually given just on the slide. We don't have to calculate it. It's given. So what is that carrying amount? 337,725. Yeah, that's a very good try, right? Yeah, this number is correct before the impairment testing, right? So if you didn't do any impairment testing, that is the carrying amount. But then we did on December 31st, we did a impairment test. We're saying the recoverable amount is 275,000. Yes, that's correct, Hasbly. Yeah. So basically now we made an adjustment to recognize impairment loss to bring the carrying amount equal to the recoverable amount, 275,000. Okay, so now this calculation is easy, right? So you use this 275% times 10%. And remember, you have to think about the partial year, right? It's 3 months out of 12. So this one, what is that result? 275,000 divided by 10 divided by 4. So what I got is 6875. Yeah, that's correct. Thank you. So this depreciation is 6875. Okay. So now when I recognize this, what is my updated balance for the cumulative depreciation? So my equipment is always the same, 395,000, the balance. But because I recognize depreciation, that's going to increase my cumulative depreciation. So the previous balance is this. So now what's my balance now after the update? 1, 2, 6, 8, 7, 5. Does that make sense?
Yes.
Yeah. Good. Thank you. How about the other students? Does this make sense? So I've been trying to figure out what is the cumulative depreciation on March 31st, 2024. That's what I've been doing. Jules, Harsh, Anna, does this make sense?
Yes.
Okay.
Yes.
Okay, good. Okay, so now I need to erase a little bit and make some rooms. I'm going to erase this part to make some rooms. So now I'm going to figure out if I have a gain, loss, or at even, right? Okay, so the question is, they sold it for $200,000 in cash, right? So what's my journal entry for cash? Do I debit or credit? So I sold it for $240,000 cash, right? So what should I do? What's the journal entry?
Debit.
Debit, cash, right? For 240,000. So this is on March 31st, 2024. What else do I go? How do I deal with this? How should I deal with the equipment account? How should I deal with this balance? 395,000. So I'm selling this asset. This asset does not belong to me anymore, right? So the balance of this account should be 0, right? So how should I do that? How can I close this equipment account? So right now it's a debit balance, 395,000. So it's a debit balance of 395,000, and I want it to be 0. Should I debit or credit? If I do, which way, how much? So because this is the count, I need this to be 0. Okay, I need this to be a 0 balance. So should I do a debit or should I do a credit here?
Or credit.
Credit the equipment, right, account for how much? To make it 0.
The same amount.
Yeah, very good.
395.
395. Yeah, very good. Thank you. Oops. 395,000. And now for this cumulative depreciation equipment account, we know the balance is this. This is a credit balance. So I need this to be 0, right? What should I do? Should I debit or credit? And for how much?
Debit.
Debit, yeah, cumulative depreciation. And for how much?
126.
126,875. Okay. So now we need to figure out what is my total debit right now. What is my total debit? And what is my total credit? So this is going to tell me which balance is larger. If I have a larger debit, then I need additional credit. If I have a larger credit, I need additional debit. So that I will know it's a loss or gain, right? So now we need to calculate. So the total debit, if I add these two numbers, that's going to be 366, right? But my credit here is 395. So I need additional debit, right? Yes, thank you, Hasbury. Yeah, total debit is 366,875, but my total credit is 395,000. So there are more credit. So in order to keep it balanced, I need to have additional debit. Okay, so basically I need a debit, loss on disposal. So the difference will be, let's see, what is the difference? 395,000 minus 366,875. So that's 28,125. 28,125. And this is a debit. Thank you. This means this is a loss, right? This is a loss. Okay, so we are using this example to show you how this depreciation is calculated. Could be a partial year, full year, right? How do you calculate carrying amount? How to use double diminishing balance method, right? So this is a very good question. Does anyone have any question?
Yeah, Professor.
Yeah.
Which was the last account you debit?
It's called a loss on disposal.
Oh, okay.
Yeah. So if it's a debit, that means it's a loss. If it's additional credit, that means it's a gain.
Okay, thank you.
Okay. Okay, so this is this question, and I believe I have the solution. Okay. Let me see. Yeah, this is my solution here. Okay, so I'm going to post this solution to the website. Okay, so just it's good for you to review. Okay, so I'm going to post this one after the class. So I'm going to stop recording because this is a long one.